Good evening, everyone. This is Cody Ashmore, Director of Weekly Option Strategies over at Simpler Trading. I want to do a quick trade breakdown that I did on Twitter, and this is a way you could potentially spot insider trading and profit from it. So in this particular trade, I had a risk from my stop level of about $500. Had a stop risk of about $500, and I netted about $2,800 on this trade, and I only put a total max risk of about $1,500 into it. And I'll go over the trade breakdown here in a second, but ultimately what I ended up doing is I ended up buying the May out of the money 44 calls for $1.62, and then a short-term bull put spread to take advantage of sideways to bullish action. So like I said, I got the long calls for $1.32, a bull put spread for 70 cents. And ultimately, what ended up happening is after a few days after entering the trade, Elon, news came out that Elon Musk was taking a 10% stake in Twitter, and price action obviously spiked up overnight if you've been following the market. And thus, I locked in those calls that I got for $1.32, closed them out for $6.30, which is 377% return. And then I closed out the bull put spread for 10 cents, locking in 85% of the credit received. And on the total amount, I locked in 563%. Now, enough about all that, and I know you want to know the trade setup and how I spotted this. I'll go ahead and show you. So first, what popped up is this. So this popped up on my little scanner, and first what caught my interest or my attention was the Twitter call volume. So this first one says Twitter call volume is 3 times normal. May 44 strike leads with the shares at 37.90. With 107,000 calls changing hands versus only 28,000 puts. That's a huge difference. So I was like, well, that's kind of different. And then there was a big sweep buyer of the 7,500 May 44 calls, which is why I got those. I was like, I'll piggyback on that. And that is 16% out of the money. And then so these 7,500 May calls are actually noted right here. So someone bought them for $1.20 and above the asking price. The mid price is 116. So someone really wanted to get in, and it is a sweep order, meaning they're looking to get filled quickly. And then next, another thing I noticed was I obviously led the bottom part, but that's just basically repeating the top portion of what I just said. And then also that there was 454,000 shares traded above ask on actually equities, the actual stock. And then there was another one for 429,000 shares at 38.70 above ask as well. And so I was like, all right, Twitter doesn't get prints too often, so that caught my attention. And then also I noticed that 4 times the market weighted volume was increased, so 96% of the trades today were calls in Twitter. So once I see information like this, I go ahead and pull up the chart. And this is the trade outlook or my trade plan, what ended up happening. So here's what I was looking at. This is the day I entered. So whenever the trade setup was basically this. So it's obviously in a big downtrend. There was a pretty big spike in volume that got it above the 50-day SMA, which is this blue line right here. That's kind of difficult to see, but it's right there. It also reclaimed weekly support. And I was like, all right, so looking at this and judging how this volume for the monthly time frame and the volume for the weekly time frame are pretty high, and so I'm like, all right, so it looks like accumulation may be happening in the zone. So I have those prints coming in, really abnormal calls being bought, and we're reclaimed a technical pattern. So from my my idea, the way to take it was, okay, I'll buy the 44 calls, I'll piggyback those Mays, because you never know, like ideally, yes, sure, this one worked out great, but that's not always the case. So that's why I also did the bull put spread to take advantage of sideways the bullish action, but I also didn't want to cap my gain for the upside. So, but I was targeting 45, which is this peak here. So, all right, so maybe by the end of May, we could, if this is buying, we could just rally up to here and take it. And then a close below this weekly support and below the 50-day moving average is my stop. So that is how I was risking $500 and ultimately made those $2,800. And as I said a second ago, we all know what happened. So this was the trade setup. Like I said, coming down, reclaimed weekly support above average volume, rallying above the 50-day SMA, and then a lot of abnormal call volume. And then obviously, like I said, here we go. He took a 9.2% stake in the company. And here's the positions I got in. So here are I bought 5 of those out of the money calls. And then here is the bull put spread that I got for 70 cents. And then ended up closing these for $6.30 and then closed the put spread side for 10 cents the next morning. Obviously, in hindsight, I look at it now, I'm like, oh, I should have held on. But I was way above my target. And it was just, I took it where it was going, or what it looked like it was going to do. So here is the time I entered the position with those dots, or the triangles, and then we spiked up, and I closed near the open after the news. But that is the trade setup and the trade breakdown. Hope you found it helpful and beneficial. But that's all I have for you. Take care, everybody.